Fair value gaps are by far the superior PD array, so today I thought I would teach you what I know about the fair value gap in the simplest way I can explain them, basically. So what we're going to go over is that we are going to go over how to spot the fair value gap, intention or manipulation, strong versus weak fair value gaps, and when the fair value gap have been used up. So how do we actually spot the fair value gap? And if you read the line up here, it says the fair value gap will be found in aggressive moves either to the downside or to the upside. And the fair value gap is a 3-candle pattern. This, in a bearish scenario, the fair value gap is the space between the first candle's low and the third candle's high is the fair value gap, which you can see right here. And in a bullish scenario, the space between the first candle's high and the third candle's low, the area in between, is the fair value gap. And as we can see here in the charts, we do have quite a lot of fair value gaps. Here is the bearish fair value gap, which is the space in between the first candle's low and the third candle's high. And we also do have quite a lot of bullish fair value gaps here, which is the gap, the space in between the first candle's high and the third candle's low. Now, when you know how to spot a fair value gap, how can we determine if a fair value gap is strong versus if the fair value gap is weak? And here we have to understand that the higher time frame here equals higher power. That will always be the case. We also have disrespect of another fair value gap, and that is simply, if you think about this logically as well, if we do not continue lower, for example, off of a bearish fair value gap, and if we're not continuing lower, we are continuing higher. So that is simply logic, and I'm going to show you what I mean by that in the charts. And is the fair value gap here in line with the higher time frame order flow? Diving into the charts here on Euro US dollar, we can see that we have this 15-minute fair value gap right here. So let's actually start off with higher time frame equals higher power. And what do I actually mean by that? So we have this 15-minute fair value gap that we stings into, but we do not follow through lower, creating new fair value gaps, but we actually come up higher again. And you're probably wondering now, why did this fair value gap not hold? And it is simply linked to the higher time frame, and this is what I mean by higher time frame equals higher power. Because if we look at the 4-hour time frame in this case, we can see that we had a 4-hour fair value gap hovering above that 15-minute fair value gap. So if we go here into bar replay first, and we go back into the 15 minutes, we can see that the 15-minute fair value gap is down here, whilst the 4-hour fair value gap is up here. And since the big players is dependent on the highest time frame, because they can't just simply place an order on the 15-minute and expect to not be slipped, they had to use the highest time frame PD arrays available, and in this case it was the 4-hour. If there would have, however, been a daily fair value gap above it, we might have stuck into that instead, most likely. But in this case, the 4-hour fair value gap was the highest time frame fair value gap available at that moment in time. And that also leads us into the in line with the higher time frame order flow. Because this, for example, let's take another 15-minute fair value gap here. Let's actually take a bullish one. Why did this fair value gap not hold? And this is also linked to the higher time frame, because this fair value gap is a bullish fair value gap, whilst the higher time frame, like we just saw on the 4-hour, has been bearish. Why would we then expect a 15-minute fair value gap to just simply flip that bias into now going higher, when we also have a 4-hour fair value gap going lower? This 15-minute fair value gap is not strong enough to push price higher, because as I just mentioned, the big players want to trade off of the highest time frame PD arrays possible. So that is why that fair value gap would simply not be something you would want to trade off of. And then we of course have the last point, which was disrespect of another fair value gap. So we have this bearish fair value gap. Is it in line with the higher time frame bias? Yes. Is it in context? What I mean by is it in context? Do we have a higher time frame fair value gap above it that we can continue lower from? Yes. We have this 4-hour fair value gap, so this is not strong in that matter. We sting into this fair value gap, and we have the rejection. We continue lower, but we then have a huge move up again into this fair value gap. This, we now have the expansion of a potential bullish fair value gap with this huge candle. The fair value gap could be created in the middle of here. So if the next candle now lets that happen, which it does, we now have a bullish fair value gap, meaning that this bearish fair value gap gets disrespected by this bullish fair value gap. But this bullish fair value gap is the most recent one, meaning that that is current order flow at that moment in time. And the bearish fair value gap is now invalidated. So if we are not continuing lower, what are we most likely doing? We are most likely continuing higher. And that is also what we can see here, that we follow through and we take out the liquidity here. Now when we understand strong versus weak fair value gaps, we also have to understand intention versus manipulation, because every fair value gap will not hold, as you have probably figured out already. But here we have 3 key points. Always expect intention, but be prepared for manipulation. Lower time frame into a higher time frame PD array equals manipulation, and I'm going to show exactly what I mean by that. And last but not least, here we have context. Diving into the charts, I have now marked out this 4-hour fair value gap, which is a perfect example of manipulation gaps also being created, because the second point was lower time frame fair value gaps into a higher time frame PD array. And here on the 5-minute it becomes extremely clear that we see we are continuing lower, we are slowly continuing lower. Here we have kind of aggressive move lower, creating fair value gaps. We respect those fair value gaps, we then continue lower until we reach this 4-hour fair value gap. This 4-hour fair value gap is on the higher time frame. This 4-hour fair value gap is stronger than the 5-minute fair value gaps going against it, meaning that these fair value gaps here, it might look like price is pushing lower, but this is actually manipulation into the 4-hour fair value gap, the higher time frame PD array, to then create new 5-minute bullish fair value gaps, disrespecting the bearish ones. Manipulation into a higher time frame PD array to then displace in the opposite direction. And displacement is fair value gaps. And then, like we also went over, the fair value gap has to be in context, which we touched briefly on just before. But that meaning that this 4-hour fair value gap was also so strong because on the daily time frame there was no unmitigated daily fair value gap below. So this 4-hour fair value gap becomes the highest time frame fair value gap available, which makes it the strongest PD array available as well. Now when we have a basic understanding of strong versus weak fair value gaps, but also manipulation gaps and actual fair value gaps that will most likely hold, we also have to understand when the fair value gap has been used up or mitigated. And here we have to understand these 2 key points. First of all, offering fair value and seeking liquidity, and what that actually means. When are we offering fair value? When are we seeking liquidity? And then we have fair value can only be offered once. So what happens when the fair value has been offered but we do not respond appropriately to that? What can we then expect? Diving back into the charts, we can see here we are still on Euro US dollar. We have this fair value gap right here. This fair value gap, the first time it gets stung into, fair value has been offered. But why does that actually matter? Because the market is always either offering fair value or seeking liquidity. That is how the market operates. So if the market is not offering fair value in the form of respecting this fair value gap, then what is the market doing? We are seeking liquidity, firstly in the form of this swing low, but then also in the form of the swing low responsible for the fair value gap being created. That is simply said the liquidity the price wants to seek if fair value is not the objective. This stings into the fair value gap. It's mitigated now. We had to push higher, but we do not follow through and create a new daily fair value gap higher, but we are preventing the fair value gap right here, because remember, there should be a space between the first and the third candle, which there is not, and we instead have a huge wood lower. That indicates that the market is not out to offer fair value, but it is out to seek liquidity. And we can capitalize on that when we then have the disrespect of another fair value gap, which we also went over earlier in the video, and we create this new bearish fair value gap, which is extremely high probability to target the liquidity pool right here. And we can see that after some struggles we eventually calm down and we take out the target. What we also have to understand is that the moment we sting into a fair value gap, it has been mitigated. It doesn't matter how far we sting into it, it doesn't matter if we just wick it, tap it, it is mitigated. So if we now come into it a second time, it is not actually the fair value gap we are respecting, but it is the swing high that stung into the fair value gap, or even the previous candle high. You see, we sweep that, respect it, and continue lower. By now, you hopefully do have a pretty good understanding about the fair value gap and how it can be used to make money. And if you do have any questions, feel free to leave them in the comment section and I will make sure to answer them. Peace.